Here is the lie that is currently destroying your financial future. You believe that to get rich, you need to be special. You believe that wealth is a result of one singular dramatic moment where you lock yourself in a dark room, stare at the data until your eyes bleed, and discover the one secret that the rest of the world missed. You think success looks like a movie scene where you bet everything on a single brilliant insight, the music swells, the market crashes, and you walk away a billionaire while everyone else is left in the dust. We all know that story. We idolize it. We dream about being the person who makes the call that no one else sees coming. But I am here to tell you something that the media will never show you because it is too terrifying for a screen. That hero mentality is not a strategy. It is a lottery ticket that you are paying for with your sanity, and statistically, it is a death sentence for your bank account. There is a story everyone tells about the crash prophet, the man who bet against the entire global economy and won. His story is incredible, historic, and fascinating, but it is the exception that proves the rule. For every single person who tried to be a hero and won, there are 10,000 people who tried to make the hero play and lost absolutely everything. This isn't about whether the prophets are brilliant. They obviously are. This is about whether you should try to be them. And the answer is almost certainly no. Let me show you why the boring approach beats the hero approach every single time, why your brain is biologically wired to lose money in the market, and why the most profitable strategy in the history of wealth creation is the one that would put you to sleep in 5 minutes. Let's start by looking at what actually happens to the heroes of the financial world. The parts the stories conveniently gloss over because they don't make for good entertainment. A few decades ago, a famous trader became convinced the market was a bubble ready to burst. He spent months analyzing thousands of data points, finding the fault lines in the system, and he made his bet. He was right. We all know he was right. But here is what happened in the gap between being right and actually getting paid. For years, he watched his fund lose money every single month. His investors didn't just disagree with him, they revolted. They called him crazy. They threatened lawsuits to get their capital back. His family life crumbled. He developed a stress-related medical condition that left him in physical agony. The pressure was so intense, the psychological torture so absolute, that even though he was proven spectacularly right, he eventually walked away from the industry and said he never wanted to go through anything like that ever again. The legends show you the victory lap. They show you the check. They do not show you the 700 days of psychological warfare that nearly broke the man. Now, I want you to contrast that nightmare with the approach of this silent titan. There is an investor, an old master who lives far away from the financial capitals, whose strategy is so simple it sounds almost stupid to the modern trader. Buy good assets, hold them for decades, don't panic when the market drops, and repeat. He has been doing this for 60 years. His average annual return is around 20%. He has never had a year as dramatically explosive as the crash prophet's big bet. But he has also never had to take anxiety medication because his investors were trying to destroy him. The silent titan is worth over $100 billion. The crash prophet is worth a fraction of that. That is incredible, obviously, but it is a fraction of what the consistent, boring approach generated. This pattern shows up everywhere, not just in investing, and once you see it, you cannot unsee it. Look at fitness. Everyone wants the transformation story. They want to lose 50 pounds in 90 days. They want to get shredded with one weird trick. The problem is that those transformations usually come from extreme, unsustainable measures. They are starving themselves, training 3 hours daily, and ruining their metabolism. Do you know what happens 6 months later? They gain it all back, plus 10 pounds, because the hero approach was never sustainable. Meanwhile, the person who loses half a pound per week by making small, barely noticeable adjustments to their diet and exercising 30 minutes a day is still fit 5 years later. They built habits instead of heroics. It is the same thing in business. We celebrate the startup that raises hundreds of millions in venture capital and tries to change the world overnight. Most of them fail. In fact, 90% of them fail. But the boring company that grows 15% per year, reinvests profits, and doesn't overextend itself is still around 20 years later, quietly dominating the market. The difference is that one makes for a great headline and the other doesn't. So what actually makes small, consistent wins so powerful? It is not just that they compound, although they do. It is that they are anti-fragile. That is a concept from mathematics, and it means they get stronger from disorder and stress. When your strategy depends on one big hero win, you are fragile. Everything has to go right. The timing has to be perfect. The market has to behave exactly the way you predicted. Your nerves have to hold. If one thing goes wrong, the whole house of cards collapses. But when your strategy is based on small, consistent wins, you can absorb shocks. If the market crashes, it doesn't matter because you are buying all the way down and all the way up. If you miss a workout, it doesn't matter because you will work out tomorrow. If one project fails, it doesn't matter because you have 50 other bets running. The small wins approach isn't just safer, it is actually more resilient in the long run. There was a massive study on behavioral economics that completely changed how I view risk, and I need you to understand it. Researchers looked at two groups of investors. Let's call them the strategists and the automatons. The strategists tried to time the market, getting in and out based on predictions about what would happen next. They were the active traders, the thinkers. The automatons just invested the same amount every month regardless of what the market was doing. They were mindless. Over 20 years, the automatons beat the strategists by a massive margin. Why? Because the strategists were right sometimes and wrong sometimes, just like everyone who tries to time the market. But their losses from being wrong wiped out their gains from being right. The automatons were never right or wrong. They just showed up. The first group spent way more time thinking about investing, researching, stressing out, and reading news. The second group spent maybe 10 minutes a month moving money into their account. They won by doing less. This is the part that really gets me, and it is the part that should make you angry at the lie you've been sold. The hero approach doesn't just lose more often. It also requires way more effort, way more stress, and way more opportunity cost from all the time you spend trying to be the hero. You see this same pattern in every domain where we have good data. In writing, the authors who publish one book every couple of years consistently for 20 years build way bigger audiences than the ones who disappear for a decade to write their masterpiece. There is a famous author, let's call him the Machine, who writes 2,000 words every single day, every holiday, every birthday. Is each individual book groundbreaking? Probably not. But he is one of the best-selling authors in history, while the tortured genius writers often publish 3 novels in their entire career and fade into obscurity. In software development, companies that ship small updates continuously have fewer bugs and more stable products than companies that save everything up for one massive release. I know what you are thinking right now. You are thinking, but what about the outliers? What about the entrepreneur who bet everything on their idea and became a billionaire? What about the athlete who came back from a devastating injury to win the championship? Those stories are real. They happen. But here is what you need to understand about them. First, you are looking at survivorship bias. For every person who made the hero play and won, there are hundreds who made the hero play and lost everything. You just don't hear about them because failure doesn't make for good documentaries. The movie isn't called The Big Bet That Went Horribly Wrong and Now I Live in a Basement. Second, even when the hero play works, it often works because of consistent effort underneath. The crash prophet didn't just wake up one day and bet against the economy. He spent years building his expertise, running his fund, and developing his analytical skills. The big bet was the visible part, the tip of the iceberg, but it rested on a foundation of small, consistent work. When you actually study most overnight success stories, you realize they took 10 years. The winning part is just the moment everyone else finally noticed. Let's break down exactly why consistency beats heroics at a mechanical level in trading, because this is where the math really becomes undeniable. There are 3 specific reasons that matter when you have capital on the line. Reason 1 is that your edge, your advantage, is probably smaller than you think. This is something most traders do not want to hear. Even if you have a genuine edge in the market, and most traders don't, it is probably worth somewhere between a 51% and 55% win rate. That edge doesn't express itself on any single trade. It expresses itself over hundreds of trades. This is the law of large numbers. If you flip a coin that is weighted slightly to heads, you can still get 10 tails in a row. If you bet everything on the first 3 flips, you go broke before the probability has a chance to work in your favor. This is why the best traders in the world talk about their process obsessively and barely mention individual wins. When you try to make your year on 1 or 2 hero trades, you are betting that your edge will show up exactly when you need it to. But edges don't work that way. They are probabilistic. You might have a great setup that loses 7 times in a row before it starts working. If you size too big on trades 1 through 3, you are out of the game before your edge ever shows up. The boring trader who risks 1% per trade on their consistent setup can withstand 10 losers in a row and still be in the game. That is not sexy, but it means they are still around when the winning streak finally hits. Reason 2 is that consistency builds pattern recognition while heroics build hope. Every trade you take teaches your brain something. When you trade the same setups consistently, even when they are small, you are building a massive database in your unconscious mind. You start noticing subtle differences between the setups that work and the ones that don't. You develop intuition, which is really just pattern recognition that happens too fast for conscious thought. But this only works if you are taking enough trades to build the database. The trader making 2 or 3 massive hero plays per year isn't building pattern recognition. They're just guessing. And here is the insidious part about hero trades. When they work, you learn the wrong lesson. You learn that your conviction was right. You learn that you should trust your gut. You get a dopamine hit that reinforces bad behavior. Then you make another huge bet and it blows up, and you don't know why because you didn't have enough repetitions to understand what actually makes your edge work. The consistent trader with 200 trades under their belt in the same setup knows exactly which conditions make it work and which don't. They have paid their tuition in small losses instead of catastrophic ones. Reason 3 is the most critical. Small losses teach, but big losses traumatize. This is the mechanism that ruins more traders than anything else. When you take a small loss, say 1% of your account, it stings a bit, but you can shake it off. You can review what went wrong, adjust if needed, and take the next trade. But when you take a 20 or 30% loss because you sized up trying to be the hero, that does something to your psychology that is hard to come back from. Literally, your nervous system registers it as a threat. Your brain's fear center gets involved. You start making decisions from a panic state instead of a rational state. I have watched traders completely change their personality after one big loss. The aggressive trader becomes timid. They start second-guessing everything. They miss obvious setups because they are scared, or they go the opposite direction and start revenge trading, trying to make it back quickly, which usually leads to more losses. The small consistent losses teach you what doesn't work without breaking you psychologically. You stay in the optimal zone where you are engaged but not traumatized. That is the only zone where you can actually improve. Here is what makes this especially hard for us as human beings. The market itself is designed to reward drama. Think about it. Every time you check your profit and loss after a big position, you get a hit of adrenaline. Win or lose, there is intensity. Your heart rate goes up. You feel alive. That is your brain getting a drug hit from volatility. The consistent trader risking 1% per trade doesn't get that hit. There is no adrenaline. You put on the trade. You manage it according to your rules. It either works or it doesn't. You move on. It is boring. And our brains are wired to interpret boring as unimportant. This creates a weird trap where bad trading feels more engaging than good trading. The gambler sizing 20% of their account on a trade feels like they are really in the game. The professional risking 1% per trade feels like they are not even trying. But check their account curves after a year. The gambler has had some incredible highs and some devastating lows, and they are probably down overall or blown up completely. The professional has this beautiful, steady upward curve that looks boring on any given day but compounds into something massive over time. And here is the really insidious part. Social media and trading forums are filled with the gambler's wins. Nobody posts their consistent 1% gains. They post their 100% day or their 10-bagger options play. So you are constantly being shown that the hero approach is what success looks like, when actually you are looking at survivorship bias in real time. You are seeing the one person who survived the minefield, not the 1,000 who stepped on a mine. So how do you actually implement this in your trading? How do you build consistency when everything about markets is pulling you toward big dramatic plays? You have to start with position sizing that makes individual trades feel almost meaningless. I'm serious. If you are feeling nervous or excited about a single trade, you are sizing too big. Your default risk per trade should be small enough that you could lose 10 in a row and still feel fine about your overall account. For most traders, this means 0.5% to 1% risk per trade, maybe 2% if you are experienced and have a proven edge. I know this sounds conservative. You are probably thinking, at 1% per trade, how am I ever going to make life-changing money? Here is the math. If you have a decent edge and trade consistently, you might average 2 to 3% gain per month on your account. That doesn't sound like much, but compounded, that is 26 to 40% per year. Do that for 5 years, and you have turned a small account into a massive one. Do it for 10 years and you are looking at wealth. But more importantly, you are still in the game. The trader who sizes 10% per trade might have some monster months, but they also have the months where they give back everything and more. They are on the volatility roller coaster, and it is only a matter of time before they get bucked off. The second thing you need is a trading plan that is so specific you could hand it to someone else and they would know exactly what to do. This is not optional. This is the difference between trading and gambling. Your plan should specify what setups you trade, what time frames you trade them on, how you enter, where you place your stop, where you take profit, how you size, and what conditions would make you not take the trade. Write it down. Every detail. Then your job as a trader isn't to be creative or to have conviction or to predict what happens next. Your job is to execute the plan. That is it. The best traders I know describe their process as boring. They see their setup. They check their criteria. It either qualifies or it doesn't. They take the trade or they don't. There is no drama in the decision-making because the decision was already made when they wrote the plan. The hero traders are reading the tape and trusting their gut and having conviction, which really means they are making it up as they go and hoping for the best. Sometimes it works because they get lucky. But it is not a process that compounds. Here is the part that separates the traders who make it from the ones who blow up. Learning to be okay with boredom. Most traders cannot handle it. They have a good setup that triggers once or twice a day and that feels like not enough. So they start trading marginal setups. They start forcing trades because sitting on their hands feels like they aren't really trading. But overtrading kills more accounts than bad strategy ever will. You dilute your edge by taking trades that barely qualify. You increase your costs through commissions and spreads. You wear yourself out mentally trying to stay engaged with the market all day. The best traders I know spend most of their time doing absolutely nothing. They are waiting for their setup. When it appears, they execute. When it doesn't, they read a book or go to the gym or work on another project. They have made peace with the fact that their job isn't to trade constantly. Their job is to wait for their edge to present itself and then take advantage of it. This is psychologically brutal at first. You sit there watching charts and nothing qualifies and you feel like you are wasting your time. Your brain is screaming at you to do something, make something happen, be more active. That voice is trying to get you to blow up your account. It is the same voice that makes people chase trades after they have missed the entry, or revenge trade after a loss, or size up because they feel like they need a big win to feel like a real trader. Learning to ignore that voice is maybe the most important skill in trading. And the only way to develop it is through repetition. Small trades, consistent process, boring execution. Do it enough times and you stop needing the adrenaline. The process itself becomes satisfying. There is research on this from trading psychology that I find fascinating. They studied day traders over a 2-year period, tracking everything. Their trades, their profits, their behavior patterns. The traders who were still profitable after 2 years had one thing in common. They took fewer trades than the average trader. Not more. Fewer. They weren't more active. They were more selective. The losing traders had the opposite pattern. They overtraded, especially after losses. They would take a loss and immediately jump back in to try to make it back. Or they would have a winning day and keep trading to run it up more. They couldn't sit still. The winning traders had this almost eerie patience. They would take a loss, review it, and then just wait for the next setup. Sometimes that meant not trading for the rest of the day. They were okay with that because they understood they were playing a long game. The consistent winners averaged 3 to 5 trades per day. The consistent losers averaged 15 to 20. Both groups thought they were being active and engaged. But one group was executing a process and the other was gambling. And before you think, well, maybe the losers just had worse strategies, the researchers controlled for that. They looked at traders using similar strategies. The ones who traded less frequently did better just by being more selective and letting better setups develop. Let's go back to the crash prophet for a second because I think his story actually proves the point in an unexpected way. Yes, he made a massive bet against the market. Yes, it paid off spectacularly. But here is what most people don't know. Before that trade, he had spent years building his fund through consistent, unglamorous stock picking. He was good at fundamental analysis. He showed up every day and did the work of reading financial statements, modeling companies, and making careful investments. The big win wasn't him suddenly getting lucky or taking a random gamble. It was him applying the same consistent analytical approach he had always used to a different asset class. The drama was in the scale and the timing, not in the method. And after the trade, he went back to basically the same approach. Careful analysis, patient investing, nothing heroic. Because that is what actually worked for him. The big moment was an outlier in a career defined by consistency. The legends make it seem like his whole career was that one trade. In reality, that one trade was an exception in a career of consistent, methodical work. The media edited out all the boring parts, which were 99% of what he actually did. This is the ultimate irony. Even the heroes aren't really heroes. They are consistent performers who had one dramatic moment that got all the attention. There is something deeper going on here that I think matters for anyone trying to make it as a trader. The hero's journey narrative is seductive because it tells us we can overcome our circumstances through one extraordinary insight. It tells us that we just need to figure out the right trade, the perfect setup, the market call that changes everything. But trading doesn't work that way. There is no perfect trade. Every setup can lose. Every strategy goes through drawdowns. The edge is in the aggregate, not the individual. This is actually liberating once you accept it. You stop putting so much pressure on each individual trade to be the one. You stop trying to hit home runs. You just execute your process and let probability do its thing over hundreds of repetitions. The traders who cannot accept this stay stuck forever. They are always looking for the holy grail strategy, the perfect indicator, the one technique that will make them rich. They jump from approach to approach, never sticking with anything long enough to develop real competence. And I get it, the boring, consistent approach feels like settling. It feels like you are admitting you can't be special. But here is the thing, consistency in trading is special. The ability to execute the same process for months and years without getting bored or impatient or greedy is incredibly rare. Most people literally cannot do it. Their psychology won't let them. They need the excitement, the drama, the possibility of the big score. So they keep gambling. The ones who make it are the ones who realize that trading is a business, not an adventure. You are trying to extract consistent profits from market inefficiencies, not prove how smart you are or have some legendary story to tell. Businesses succeed through systems and consistency, not through heroics. Let me give you some examples from trading specifically that show this principle in action. There is a trader I follow who trades one setup. Literally one. It is a specific type of mean reversion pattern on indexes. He has been trading it for 12 years. He takes maybe 2 to 3 trades per day when it shows up. He risks 1% per trade. He targets 2 to 3 times his risk. His returns are consistent year after year. It is not flashy. But he started with a small account, and now he is managing significant capital and keeping a percentage of the profits. He is making a fortune trading one boring setup repeatedly. Compare that to the guy who shows up in online communities with a different strategy every month. This month it is crypto scalping. Last month it was options. Before that it was foreign currencies. He has been at it for 5 years and his account is still roughly the same size because he keeps blowing up and restarting. He has learned nothing because he never stays with anything long enough to learn. Or look at the systematic traders, the quants. They develop a strategy, backtest it, and then they just run it. For years. They are not making discretionary decisions. They are not trying to outsmart the market on any given day. They are letting their edge express itself over thousands of trades. And you know what? The best systematic funds have been doing this for decades. They are not trying to call market crashes or pick the next hot stock. They are extracting small edges repeatedly, and it has made them the most successful entities in history. Here is why this is harder for traders now than it has ever been. Trading has been gamified to feel like entertainment. Look at the apps on your phone. They send you push notifications when your stocks move. They have confetti animations when you make a trade. They show you what is trending, what is moving, what everyone else is buying. Everything about the interface is designed to make you trade more, not trade better. The 24/7 markets made this even worse. The ability to trade constantly with massive leverage and extreme volatility is like they designed the perfect environment to destroy trader psychology. You can get a massive move in an afternoon. You can lose everything in an instant. The emotional swings are massive. And social media shows you everyone's winners. The guy who made 1,000% on some digital coin. The person who nailed the short on the tech giant. The options player who turned a paycheck into a fortune. You never see their overall account curve, which is probably down massively because they blew up everything they made trying to do it again. This creates a toxic environment where consistent trading feels inadequate. You are making your 2 to 3% per month with controlled risk, and you see people claiming they made 50% in a week. It makes you question whether you are doing it wrong. But here is the reality. Most of those people give it all back and more. The screenshots are from the temporary winners, not the long-term survivors. The platform wants you to feel like you are missing out because they make money when you trade, not when you make money. So what do you actually do about this? How do you build a consistent trading practice in a world that is constantly showing you get-rich-quick plays and overnight millionaires? First, you have to kill your fear of missing out. Unfollow anyone who is primarily posting their daily profits, especially if they are posting massive numbers with no context. That content is designed to make you feel like you are missing out. And that fear is the enemy of good trading. Follow traders who post their process instead, who talk about their setups, their risk management, how they handle drawdowns, who have been doing this for years and are honest about how hard it is. The real traders aren't posting luxury cars and watches. They are posting chart markups and discussing market structure. Second, set up your trading environment to support consistency, not gambling. This means actual practical stuff. Turn off push notifications from your broker. Don't keep a second monitor showing your balance in real time. Set price alerts for your setups instead of watching charts all day. If you are prone to overtrading, put literal barriers in place. Some traders I know set up their platform so they can only take a maximum of 5 trades per day. Once they hit 5, the system locks them out. It sounds extreme, but if you are someone who takes 20 trades when stressed and 15 of them are garbage, that rule might save your account. Same with position sizing. If you keep sizing too big, write your maximum risk per trade in big letters and tape it to your monitor, or set up your platform to automatically reject any order above a certain size. Remove the ability to make the mistake in the moment when your emotions are high. Third, and this is the mental shift that matters most, stop thinking of yourself as someone trying to get rich and start thinking of yourself as someone who trades professionally. Professionals have a process. They follow it. They don't deviate based on how they feel or because they saw something exciting. They treat it like a job. Show up, execute, log results, improve incrementally. Amateurs are trying to hit a home run. They are looking for the trade that changes everything. They will blow up their account 3 times trying to catch lightning in a bottle because they are optimizing for the wrong thing. Every trade you take is a vote for the type of trader you are. Take a trade outside your plan? You voted for being an impulsive gambler. Stick to your rules during a drawdown? You voted for being a professional. Skip a marginal setup even though you are bored? You voted for being selective. You don't need every vote to go the right way. You just need the majority. You build that majority through consistent repetition of good decisions, not through occasional brilliant trades. The brilliant trades will happen sometimes. Your edge will occasionally give you an amazing winner. But those aren't what make you profitable. What makes you profitable is that you didn't blow up your account during all the times when your edge wasn't expressing itself. I need to be honest about something. Even with a consistent approach, you are going to have brutal stretches as a trader. You will have weeks where your setup doesn't work, where you take 5 losses in a row, all following your rules perfectly. You will watch other traders print money on trends you are not participating in because they are not in your setup. You will start questioning whether your edge even exists. Those moments are when most traders abandon their process. They think, clearly this isn't working anymore, and they either quit or they start taking random trades trying to force something to happen, and that is usually when they blow up. But here is what actually happens during drawdowns if you are trading properly. You are gathering data. Every loss following your rules is information about when your edge doesn't work. If you keep stats, you will start noticing patterns. Maybe your setup doesn't work well in low-volume environments, or during certain market regimes, or on specific days of the week. The consistent trader uses drawdowns to refine their process. The gambler uses drawdowns as an excuse to abandon their process. And here is the uncomfortable truth. Your edge might legitimately stop working someday. Market conditions change. Inefficiencies get smoothed away. The strategy that worked for 5 years might stop working. That is just reality in trading. But if you have built a process around consistency, taking small risks, testing thoroughly, keeping good records, you will notice when your edge deteriorates. You can adapt. You can develop new setups. You won't blow up because you aren't risking 20% of your account on any single approach. The hero trader who made their year on one big call, when their moment of insight stops working, they are toast. They have no process to fall back on. They were right once and they think that means they will be right again. So they keep betting big and eventually they lose everything. Here is my last thought on this, and it is the one that completely changed how I approach trading. The hero narrative teaches you to think of trading as a story with a climax. You are working toward the moment where you call the crash, nail the bottom, and make the trade that proves you are brilliant. But professional trading doesn't work that way. There is no climax. There is no moment where you have made it and can coast. You just keep executing your process day after day, extracting your edge when it is there, managing risk when it is not. The traders who make it long-term aren't the ones trying to be remembered for one great call. They are the ones building a repeatable system that generates consistent profits year after year. That is not movie material. But movies don't pay your bills.